Hello everyone, today I'll be going over my stock portfolio and my planned trades going forward for next week. My overall account balance is $122,000, my margin balance is $80,000, and my maintenance requirement is $104,000. And I have a stock buying power of $48,000 and an options buying power of $18,000. I don't plan on writing any more sell contracts where stock could be assigned to me, so I'll continue writing options on the stock that I do have until it is assigned. And so that is my main plan going forward for next week. So stock closed at $442 at market close on Friday. So I'm going to use the same model that I did last week, and I'm basing the option prices on the historical data. And the historical data showed that there was 6 instances where we had more than a 20% gain in 1 week, with one of those instances being over 30%. And this is the highest instance in the last 69 weeks for the Tesla stock in one trading week, from the market close on a Friday to the market close on a Friday. What was the maximum gain that's ever happened based on the historical data? And that is 31.57%. There is a slight flaw with this model. So the options actually expire 1.5 hours after the market close. And so you could still have the stock assigned by swings or changes in the aftermarket hours price of the stock. And unfortunately, the historical data does not show how much it's changed in the after hours. So that is the main risk that I do have to this model. Going forward for next week, I'm going to set that at 600. There is a major event that is occurring next week on Tuesday for the Tesla stock, and that is Battery Day. There should be quite a bit of volatility going forward for the trading week. This is where I'll set my first option. And because it is Battery Day, I will be setting the other options at least 700. For this estimation purposes, I'm putting at 600, 700, and 800 for the 3 contracts I plan on writing. But I may drop this down to 740, maybe 660. We'll see how it is at the market open. If there's a dramatic increase at market open, then I may adjust these options accordingly based on this. So how much did it gain last week? Well, it closed at 442. That puts us at about an 18% gain, because the last Friday before, it was 372.72. Roughly 18% gain for the week. It's actually underneath the 20% gains in 1 week. So it doesn't even fall in this criteria here, even though it was a very good week. This covers my planned trades for the Tesla going forward for next week. So what about CCJ? Well, I was assigned that stock through at $11 strike price. So I'm going to turn around and sell the call option now at that $11 strike price. Now, last week I collected a premium of 28 cents, which was very nice. But unfortunately on Friday it did drop quite a bit. It is now trading at around $10.50 at the last trade. Premiums aren't quite as nice as last week. I'm estimating that I'll get around $9 per contract, or 9 cents forward. So I'm going to write $7 puts on that. And so you can see here that is going to be basically 6 contracts or 600 shares. And I'm expecting to get about 8 cents or $8 per contract, a total of $48. And then the last call option I plan on writing is at a strike price of 150. And this is for the Square stock. Now the premiums are showing $2.54 to $2.63. So with the one contract, I plan on getting about $254. This gives a summary total of what my planned trades going forward for next week. With this particular trade, it was from last week that it was set up. And right now it is worth $1.50 per contract, and I have 12 of those contracts. So that does look like it will expire out of the money. I can turn around and rewrite the sell put again, probably 2 weeks out, for roughly 5 cents going forward at the end of this next week. So here shows the probability based on implied volatility of the stock itself of these options being in the money. Highest probability one of being in the money is the Ford $7 put, then followed by the Square, and then CCJ. And you can see these Tesla options, based on the implied volatility, the probability of them being in the money is very, very low. But Battery Day will be one of the significant events for Tesla. That does not take that into account. And we can look at that going on the next graph here. Pulled this from my brokerage's account. This is just an analysis tool that they have. And it's fully based on the implied volatility. So the implied volatility of the Tesla stock is 125%. You'll note that that did increase in comparison to last week. So these are the probabilities of those options being in the money. At $600, we have a 2.9% chance of that occurring, just based on this implied volatility. Looking at the Square stock, you can see here that there's a 90% probability it'll be between $165.90 to $126 roughly for the Square stock. with a 32.57% chance that it will actually be in the money, above $150 per share. Then looking at the CCJ, this has one of the lower volatilities. It's more than half of what the volatility is of the Tesla stock. Not going to vary as much in price as a result of that. 24% chance that it will be in the money or above $11 per share. And then followed lastly by the Ford stock. So this is the opposite since I'm selling a put. And so then that would close my short position if it goes below this number. So that is a 7.3% chance based on this model using implied volatility. Pretty much all I have for today. Thank you. Bye.